The weekend attacks on Saudi oil facilities dragging stocks on Wall Street lower Monday, although they're powering up energy shares. For more on the implications for the market, we're joined by Brett Ewing. He's Chief Market Strategist at First Franklin Financial. He joins us via Skype from Tallahassee, Florida. Well, Brett, energy shares are rallying, especially stocks like Apache up 17%, Marathon Oil up 12%. Do you see any long-term effect for this beleaguered sector that hasn't been able to keep up with the rise in oil prices?
Fred, I think a lot of the move that you're seeing initially off the attack that occurred Saturday is some short covering right here. I don't know if it's going to be a sustained move, but I do know that there's a new risk premium that's put on the oil market because I think what the world has learned here in the last couple of days is how vulnerable Saudi Arabia's infrastructure actually is.
Would you advise that investors pick up any of these shares? You were saying earlier you think maybe that's a short covering.
I do. I believe a lot of people have been really hitting the energy market hard as a hedge trade, being short the energy and long the tech and health. And I think they got caught off guard on Saturday, and they're trying to scramble here on Monday.
So do you think this rally is not sustainable?
I don't know. I think what I would pay attention to is we don't know what kind of response is going to come out of this. I would tell you this is the largest attack on the oil market by a terrorist organization in history. Certainly affected the production, the greatest ever. And I'm pretty confident there will be some type of response. And I think that response is going to dictate whether or not this is a sustained rally.
Are there any particular stock trades that you'd recommend at this point, buying or selling?
You know, Fred, we've been saying for the last 6 months that we're continuing our strategy here. We believe that it's an overcrowded trade in the defensive plays, whether it's consumer staples, utilities, or treasuries. And we have been really looking for opportunities out there in small cap value. And we've picked up some great names with incredible growth rates that are trading at valuations that are just unbelievable. And the underperformance of the Russell 2000 versus the SPY is really stretched right here, and a reversion to a mean is the most likely case. And I think that it would take some forward movement on this trade issue with China, and I think that reversion to the mean is going to happen.
But based on today's news of the attacks on the Saudi oil facilities, are there any trades that you'd recommend? We've seen movement in defense stocks going up. We've seen fuel-dependent sectors such as some transport stocks, related stocks, airlines and cruise lines going down.
On a day like this, we have looked back at some. We've been buying the mortgage REITs, and they've been hard to buy lately in September because of yield curve steepening. And today we've had an opportunity to maybe pick up a few more of those. Also, I think the defense stock area is interesting. We've been in that, but there are some opportunities I think maybe that we might look at here going forward.
And is there any likelihood that a jump in gasoline prices as a result of these attacks would crimp the ability of consumers to spend? They've been the ones who've been supporting the economy so far. Would this create concerns about global economic growth?
I think it could. Certainly, the consumer has been the strongest part of our economy all year, and we've had low inflation. Higher gas prices could translate into the inflation numbers, and it could put additional pressure on the Fed right here as well. So,
our thanks to Brett Ewing of First Franklin Financial, coming to us from Tallahassee, Florida via Skype. I'm Fred Katayama, and this is Reuters.